Welcome back everybody to another YouTube video. In today's video, we're going to be going through a trade I took on the 10th of October 2025. I'll be running down through all the steps and everything that I had in mind, the thought process from A to Z, in order for you guys to benefit as much as you can from this video. So without further ado, let's get right into it. So the first thing that I want to see and look for is a sweep of liquidity, whether that being a buy side liquidity or a sell side liquidity level getting swept. And the reason being is because price moves from liquidity to liquidity. So let's say price swept buy side liquidity, then price is going to be seeking sell side liquidity, and vice versa. If price swept sell side liquidity, it's going to be seeking some sort of buy side liquidity. So as we can see right here, price did sweep a buy side liquidity level at 9:37 a.m. So that is just right after the market open. So as soon as we got that buy side liquidity level getting swept, which was previous day high, now I'm going to be going to look for a short. So the second thing on our checklist criteria, as you can see right here, is going to be a swing low to be created. Now we're going to be looking for a swing low that is formed within the markets. And the reason why I'm going to be looking for a swing low is because that swing low is actually correlated to step number 3 and 4. Without that swing low, step number 3 and 4 are not going to be able to happen. Now, as you can see right here, at exactly 9:43, we do get a swing low that is created. And what essentially a swing low is a 3 candle pattern. So if we zoom in very well, we do have this candle right here, here, and here. Let's call this candle here number 1, this candle here number 2, and this candle here number 3. Essentially, the swing low is the middle candle, which is this candle right here, number 2 candle. Its low is the lowest out of 1, 2, and 3. So following that swing low, the third and fourth thing that we need to be looking for is a market structure shift and a displacement to the downside. And essentially what a market structure shift is, it is a candle or candles that break below this swing low right here. So as you can see right here, this candle and this candle at 9:50, we drop close below this swing low right here. So that is just essentially called a market structure shift. And a displacement is pretty much also a massive drop, a strong closure of 2 or 1 or how many candles price is willing to give to the downside, which pretty much indicates to me that price is willing to seek lower prices. Now, number 5 on our checklist is going to be looking for a fair value gap. And essentially what a fair value gap is, it's a 3 candle pattern again. So let's call this candle right here number 1, this candle right here number 2, and this candle here number 3. Now, number 1's candle is low and number 3 candles high do not overlap, and there is an inefficiency right there. There's a gap. So that is essentially just called a fair value gap. So the reason why we need a fair value gap is because when price retraces into the edge of that fair value gap, that's where our entry point is going to be, and that's where we're going to be executing short. So usually we always execute as soon as price retraces into the edge of that fair value gap, which would have been at that 9:58 candle right here, as we could see. But in this scenario, we actually had 2 problems. Number 1 being that if we did execute at the edge of that fair value gap, we would have been risking 33 handles and a half. And our rule is to risk only 30 handles max per trade. That's the problem number 1. Now, problem number 2 is we had news, red folder news, actually 10 a.m. coming out. And that could be very, very volatile. It could stop you out instantly. So I couldn't actually enter before that. So I waited after that 10 o'clock candle has finished and closed. Then I executed at that 10:01 candle, risking 30 handles above that swing high and placing my take profit below this swing low for the minus sell side liquidity. And as you can see, price does consolidate for a really long time, but then eventually it hits our take profit. Now, Trump did announce the 100% tariffs on China, and that is why we see this massive down close candle and a massive dump in the market on a Friday. And something that I also do want to mention to you guys is obviously we have the correlation of ES on the right hand side. So never forget that ES and NQ should be and must be correlating before entering a trade. If you don't get a market structure shift on ES, but you get it on NQ, don't take the trade. If you're missing one thing from one or the other assets, do not take the trade. Both assets must show correlating price action. So as we can see right here, we do get this swing low, the break of market structure to the downside with a displacement. We do get this fair value gap, and we do get the retracement into the fair value gap. So if we have both assets correlating like that, then it is an absolute A+ of a trade, and I would highly recommend you taking it. So there you guys have it, the ICT 2022 silver bullet model. If you guys do have any questions or inquiries, please let me know in the comments down below, and I'll be sure to get to them within the next 24 hours or less. Now, just an announcement, guys, I do have my VIP Discord where you guys could literally take the exact same trades as me on a daily basis and catch bangers like this. The link will be in the description down below. I love and appreciate each and every one of you guys. Thank you so much for watching and tuning in, and I'll see you in the next one. Peace.